So hello guys, this is going to be a quick market review um, for this particular week. Today being 17th of being a new week, which is 17th Monday, November. So I'll be doing a quick review on where I myself believe price is likely to reach for, what I believe is trying to do. Uh, for the E-mini Nasdaq. The E-mini Nasdaq you could also be referred to as your US 100, US Tech, NAS, that's NAS 100 or NDX 100, depending on the broker you're using. So for you to be able to use the NQZ, I've emphasized on this before. You can. This is actually paid. I think you have to pay like $7 for this particular live data, or you can just search for US 100 US 100. You can actually use any of those. Yeah, you can actually work with any of this for free. So the difference is the time. So if you don't pay for this, to be delayed by 15 minutes or 10 minutes real time data. So moving on, first of all, we need to work with the economic calendar, which is very, very important. And as we all know, we're fully aware that the US market, the US government is now fully open, so no more shutdown. Because for those that actually observe the previous weeks, the PMIs, the NFPs were not were not uh, were not made to effect. So it was not like effective. It was more like scrapped, or they kind of placed on tentative. So we all are the NFPs. The NFP, that's the non-farm payroll, is always every first Friday of every new month. First Thursday Friday of every new month. And as of last week's Friday, there was no NFP. I think so. There was no NFP because due to the government shutdown. So that was kind of like suspended or but now the US government is now open, so we can start expecting uh, interesting move, volatilities in the markets, liquidity runs, injection of liquidities in the market. So with the with this using the economic calendar, we have for Monday we have interesting events. We have event at 8:30. We have at 9 a.m. This is actually, please take note, this is actually EST, because actually I had to set my time. Everything I'm working with is on EST, not Nigerian time. They are all on EST. My trading view is on EST. So the 8:30 a.m. EST is 2:30 p.m. Nigerian time, depending on where you're watching the video from. So you should always make sure you correlate. You tend to like correlate it with your time frame, with your time zone rather. So this is actually we have economic calendar and Empire State Manufacturing Index, which will be released at 8:30 a.m. EST, which is 2:30 p.m. Nigerian time. We have news events. We have economic FMC, William speaks 9 a.m. 9:30. We also have construction spending reports. So that's 10 a.m. So 10 a.m. should be around 4 p.m. Nigerian time, if I'm correct. So we have this. We have interesting. This particular week is going to be interesting. So I feel so. It's going to be interesting. So we have okay, you could see this for yourself. We also have the unemployment rates, non-farm employment change, average hourly earnings, employment claims. So this is going to be very, very interesting. Thursday, Friday, FMC, we have PMI. So these are days where you need to make sure you're active. So and you make sure you don't play account in this particular time. So moving on to this, we uh so so this is the E-mini Nasdaq, well, I'll focused on the E-mini, that's the E-mini Nasdaq for this particular week, so focused on the E-mini Nasdaq. So you could actually use either you could search for the if you can't use this, you could search for US 100. You search for US 100 on your MT5. If you know you can't pay for this actual live data, you could search for US 100. Actually, I don't want to type it US 100. So you could use any of this because if you know you can't actually pay for this particular live data, because if you're not paid for it, it will be delayed by 10 or 15 minutes backwards. But if you actually want to use the free real-time data, you could actually just work with the US 100. It's most likely more like the same thing. It's more like the same thing. So moving on. So let's move on to the main business of the day. So here we have the imminent Nasdaq starting from the weekly time frame charts. Last week was kind of like it was funny for me because actually just actually did most of watching and just watching because was price was actually trading inside was just busy trading inside of this new week this weekly volume imbalance. Yeah, so it was just trading inside this particular this new week volume imbalance. Wasn't really that easy for me to actually frame out a good trade. So except till on Friday, which was Friday last week, I was able to like find something meaningful for me. But actually, I don't want to go into too much details for that. I think I dropped a video about that. So um, we could see we rejected from this weekly volume imbalance here. So uh, we could actually trade into this level here, then come down to this side here. But let's see. We have the new week, the weekly volume imbalance by trading into it, then close to the downside. We are still here. So going to the daily time frame chart, actually I want this video to be a short one. We have this volume imbalance here, this volume imbalance here, daily volume imbalance, and also what else do we have? We have what we have Wednesday's candle, we have Thursday, which was this very strong full body closure down to the downside. And we also have Friday's candle here as well too. So if you could see, what can you see present here? We have what we have we have what we have this fair valuation gap here. We have this daily fair valuation gap here. If you pay attention to this, we have a day fair valuation gap here. So I would like to see price like move into using Monday or Tuesday to trade into this level and then start trading to the downside. Yeah, so this is what's going to make sense. This is more like the only thing that's going to make sense for me. If we will be bearish, like to see price trade into this daily fair value gap, daily bearish fair value gap, and then we'll start looking for lows. Yes, because if you pay attention, let me see what if you pay attention towards the dollar index as we're doing. I feel this month's I feel the dollar index is likely to keep pushing higher. Don't know, except proves otherwise, but we'll continue pushing higher to maybe to this level here. But depending, we don't know for sure, but might continue pushing higher. But coming to most I try don't like focusing putting more a lot of attention on this. Just tend to just work with the this one straight up. So what's going to make sense for me if we see price trading towards into this daily fair valuation gap. So this is what I'll be working with: daily fair valuation gap here, and then trade to the downside. Then I'll be what confident what to be bearish in the market for this particular week. So you could see I already have some levels which I already marked out on Saturday. Yeah, I think I did some like review on Saturday when I was like working some levels I like to see price reach for. And also this is the Asian session. I was able to take it. I think I was able to take a particular trade during the early um the opening of this particular week because I had a strong conviction that price is going to reach for a particular level, which I'll be showing to you guys. I'm showing to you guys why I believe price is going to reach for this level, and I'll also be showing you the trade execution. I think it's more like if I could attach it to this particular video, you can see it for yourself. So we have the daily this daily fair valuation gap here, which is this level from here to here. So let's start with the daily fair value gap. So denoting this as DEFG. So this is the area where I like to see price do something like well, like possibly like this, trade into the daily fair value gap and then start coming down. So it's well, I'll start expecting price to give like bearish confirmation, except it proves otherwise, because anything is possible when it comes to this kind of market. But so far, or as far as price did not start from this particular low here before coming into this fair valuation gap here, aside from this week here into this gap. So I would like to see price use this daily fair value gap to what as a resistance to push price to the downside, to the down that's to the lows of this level here. So this is how I'll be framing my bias. Or if price tend to use this level, this gap here as an inversion, then I could now start having another or a different perspective, or a different view or a new view of what price is trying to reach for, maybe to this side, then into this into this CB. Yeah, but what I believe mostly is what price is going to use this level here as what as a resistance towards to trade towards what towards the lows here. So to be using this man here, this area here as a resistance towards to push price to the downside. So we have going to as well as the 4 hours time frame chart. The 4 hours time frame chart. Nothing meaningful here. So let me go to the hourly. So we have yeah, this lipsticks here, this levels here was what I actually highlighted on Saturday, and I was able to make something of it. So I wanted to see price. Initially, my first thought was I wanted to see price open this week. But since I have no idea, I don't have the ability to predict how price is going to open for the week. But I was expecting the weekly opening gap to be very small and to be in between, and for it to form in between this range here. There's this shaded area here and this shaded area here. So first of all, we have um this hourly gap here, which I highlighted as what as the 1 hour BC because this is the 1 hour time frame chart. So if you pay attention to this, you have the hourly BC, that's the buy side imbalance, sell side inefficiency, which was formed on what last week, that's on Friday. So this BC here and price opened inside of this level here and uses as a support level to trade to push towards what to the upside. So coming so as low as 15 minutes time frame to 15 minutes time frame. So we have to 15 minutes time frame charts. We have this. For those that don't understand how price bounced off from this level, because already have these levels already marked out. Because this was the only trade I took on Friday, and I was able to make something of it. I dropped it in the WhatsApp community, where I told you guys where I would like to see price reach for. I made mention that I would like to see price trade into the this previous 15 minutes first presented fair value gap. I dropped the screenshots when price was still at this level here. I dropped the screenshot that I want to see price. If we're bullish, I like to see price draw towards what this level here, and also into this relative buy sides. I dropped the screenshot like this. Made mention for those in the community, you could actually remember I dropped this level here. I said price is going to reach for this level, buy side liquidity here, which it actually did. And also drawing towards into that 15 minutes previous 15 minutes first presented fair value gap. Though it did not get to that into the gap, it did not trade into the gap, which I kind of find it interesting. And it makes sense to me because I was like, okay, since it did not trade into that gap, I think it's going to use it later on. Sorry, excuse me, which is going to use it later on in the future because you'll see they try to push price into that gap, but but price did not get to that level. So I'm like, okay, since they could not use it on Friday, since they could not drive price on Friday to that, so this first presented fair value gap. Let me use this indicator to bring it out so you can see for yourself. So you can see it now. So let me remove this daily fair value gap since you already know what it is. So we could see this is the previous or the Thursday's first presented fair value gap. That's what I mean by first presented fair value gap is the first presented fair value gap that forms depending on the time frame, please. Is the first presented fair value gap that forms after 9:30. That forms after 9:30, after the 9:30 a.m. Eastern time. So it's the first 15 minutes fair value gap that forms after 9:30 a.m. Eastern time. So which is this level here, and it is always very, 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 very important. I tend to always make use of it because price always tend to use this level. Either it uses it as a draw on liquidity or as a level for support or as a resistance level. But it is always it is very, very, very important. It is a particular area where you should always tend to pay attention to because it is you can act as a DOL, as a POI. If you see on my chat here, we have where I noted this one down here. So I said note down major POI and take actions from there. So what I mean by note down major POI and take action from there is POI means point of interest. So point of interest whether be a form of a form of support or a form of resistance. As you could see, this level here, which I highlighted on Saturday, or in fact, just this level here, which I highlighted like I think beginning of this week was when I actually had this down on my charts. Beginning of this month rather, I had this man down on my chart. And how was I able to get this? I paid attention to what this 15 minutes CB. This is how I got it. So this is the POI as well. So what I want you guys to see, you have this particular CB. I got it from the October 17th. So to tell you, October 17th, there was a CB that formed October 17th and was not filled and has not been what has not been filled. So if you see when you see some important CB or BC that has not been filled, or let's say new day opening gap or new week opening gap or imbalances that has not been filled yet, you tend to always make sure you note it down or you write it out. You tend to note it down somewhere because price is going to relate back to these levels in the future, either in the nearest future, because price is going to relate back to these levels or to these areas and use it as a draw or as a target to want to push price to those levels or react from those levels. So these are examples of what POI. So if you tend to see this was what this particular gap was what was left open on what at 17th of October. So imagine since that particular time and has not what's been used at all, was never traded into, sorry for this, and was never traded into until what, until, so imagine since 17th of October, so imagine since 17th of October till until 14th of November, that was when price used that particular BC, which I already highlighted, and use it as what as a support level. In fact, as a target to push price down, and use it as well as a support level to what drop price towards what those levels which I called out, uh, which I called out in the community, which I called to you guys. I told you guys who's going to act as what as my targets to take profits from. So you could see these are POIs here. So POIs means what point of interest. Point of interest is those particular areas that price when price gets to those particular areas is going to react from those areas. So this could be your major support levels or your major resistance levels. So which was this year. So you will see if you go down to uh 5 minute time frame chart on this, you will see price traded into this level 830, then prior to the 930, that's 930 opening bell. So you can see that's when during 930 is when the major action starts. So it's for the New York session. So you could see price rate into what into that BC, which was gotten from November 17th or from October 17th rather. Trade into it, respecting what the midpoint of it, respecting the midpoint of it. So you can see the midpoint was respected. So in the sense that meaning that what interpreting it as what meaning that what it is using it as what as a strong support system. And also as far as it has taken sell side liquidity, it took out sell side liquidity at this particular level here. So that was why I was very much confident. I was very much confident to take that particular uh, position, that buy position here, and my target was this relative buy side liquidity, these levels here, and also this uh that 15 minute first presented fair value gap. I was able to make profit off it, but I did not allow price to exit to reach that levels, to reach that perfect exit, because it's always best you tend to make profits. You tend to take profits while the market is giving you profits. You should never turn a winning trade to a losing trade. So that's one particular rule which I always tend to follow. Never turn a winning trade to a losing trade. So you always make sure that once the market is giving you profit, you're taking profit from it. You're taking something out of it. So a lot of persons were miss this particular opportunity in the sense that price, more like they were expecting price to want to do more like a rebalance or more like to fill up a fair valuation gap before start moving higher. Yes, I also anticipated for that level, but I also anticipated or was also anticipating for price to reach for a fair valuation gap. But from experience, which I know from experience, that particular day was Friday, and from experience, I know that there are some times whereby price will not give you the opportunity to want to for that perfect entry. But as far as I know where my stop loss is is meant to be or is supposed to be, the stop loss area was where I focused on, and I know where should my stop loss be. My stop loss should just be right below here, and how much should I risk? So in the sense that I'm trying to jump into that market, I'm trying to catch that move. I don't want a case where I'm trying to I'm trying to wait for a fair valuation gap to get filled before I enter the market. Before I enter, and price does not fuel me or give me that entry, then I tend to miss the whole move. Because I know what price is going to I believe what price is going to reach for this level. And price has reacted from this level, taking our sell side liquidity. So I was very much what convinced that price is going to get to that level. So and I don't want a situation whereby me waiting for what a perfect entry would make me miss that particular move. So I jumped in on that trade, then make sure I sized them properly. I used the appropriate size, uh, which was comfortable for me and for my accounts. Place my stop loss here, then ride everything to this particular high. I dropped the video on that. I believe so. I think either on TikTok or Twitter or whatever. I think I dropped it somewhere there. Maybe in the group chat, I don't know, but I think I dropped it. So there's a yeah, I think it's on TikTok. I dropped it there. So you'll see two profits at this level here, and also took another trade into that 15 minutes the 15 minutes first present fair value gap. But price did not is get to that particular level there because whenever how I tend to take profits, I tend to take my profit is whenever I'm anticipating for a particular level to get hit. So let's say my take profit is around here, and price is trying to get to this level here, and price around this level here, and is not showing me strength to want to push it. It might eventually get to that level, but if we start dancing around it or dancing or trying to like massage that area or trying to like dance around that level, I just tend to just close that position. I don't want to wait for it because I don't want to miss out on it. Or maybe like I don't want to be too caught up or whatever because or be trapped. Because as far as I've been able to ride a lot of profit along that level, I don't want to lose that whole profit I've gained because of that small little remainder. So I tend to just take that profit, just close the position, or I just move my stop loss to just follow up with it. So that's how I tend to do it. So that's how I was able to make profit off that without, despite the fact that price did not exactly reach that first present fair value gap, which I called out for, but I was able to make profit off it. So moving on, we have I was already explained this. So moving on, we have the 1 hour the 1 hour BC, which I have here. So the 1 hour BC, which we have, this is it here, which I liked it, which was found on Friday. So this is the what a POI. Yeah, now I remember the reason why I got distracted deleted from that. So this is what an example of what a POI, a point of interest. So whenever you're making your analysis, whenever you are highlighting your levels, you should always make sure what you have what your POIs. Your POIs are those levels you should always what have marked out on your charts. So and you should always tell yourself that okay, I'm not going to take any particular trade. I'm not going to take any particular trade until price hits or reach my what a POI or my POI. That is when I'll start looking for what entries. That's when I'll start looking for moves or reactions, or that's when I'll start anticipating for what some setups to form. So taking trades from your POIs tend to help you with to avoid taking trades that does not have a proper structure or that does not have a structure or tend to save you from over trading or taking trade that does not make sense. So if you tend to wait for price to reach for your POIs, that's your point of interest, then there are some reactions, there are some reactions you're most likely to see that's going to give you okay, price is reacting to price is giving me price is reacting or showing you some signals okay I think I'm truly going to react. I'm truly going to give you. I'm truly going to bounce from this level here. That is when you can now start looking for what for entries from what. That's when you can now start looking for entries. What I said is what always what have what major POIs that you should what want to see price bounce off from that level. Like I started from the daily time frame charts, which I told you guys are I would like to see price start if price is going to be bearish, if it's going to be bearish this particular week, I want to see it start being bearish from what from that daily fair value gap. So that daily fair value gap is going to act as my what as my POI as my point of interest to want to be what to be bearish. So that is from that daily fair value gap. I'll start looking for what bearish setups for this whole week. So that's when I'll start looking for what bearish setup for this whole week. So because you could see for now we are not inside the daily fair value gap. So I can't say I want to start being bearish now. I want to start looking for bearish setups or bearish trades because we are not inside the what inside the daily fair value gap yet. So this is what the major POI here. So this is an example of it here. This is a major POI here. And also breaking it down, what and what again is inside that daily fair value gap or this major POI. We have this 15 minutes previous best presented fair value gap inside inside that inside the inside the daily fair value gap. So you can see it's all making sense, right? We could say we have daily fair value gap, which I told you guys I'd like to see price. Most likely, in my own opinion, I'd like to see price reach into trade into. I don't know how high it's going to get to, if it's going to really get to this level, if it's even going to work out, I don't know for sure. But I'll be sharp and active and uh be very much active and try to see if price is going to give me what I would like to see. I would like to see price trade into this level here. I don't know how high it's going to get to or how high it's going to trade into this level here or low. Then start coming down. Then start coming down to the downside here. So then start coming down to the downside here. So I'd like to see price use this level as a POI as a point of interest. So point of interest, that's what I'd like to start saying bearish setup from, then for me to now start going short for this whole week. It's just simple, very, very simple. So in this particular kind of trade idea, I'm not using any kind of indicator, special indicators or whatsoever. It is just very, very very, very simple, just pure price action in place. So we have so I told you guys the major POI is what is this daily fair valuation gap. Yeah, and inside this daily fair valuation gap, if once as I broke down to the 15 minutes time frame charts, we could see we now have what 15 minutes a previous 15 minutes first presented fair value gap. So the bounce off could start from inside this level here and then start coming down, or it could violate it, trade into this zone higher, then start coming down, or you could not even expect the daily fair value gap to come down. You could create an inversion, then what start going to the upside. So irrespective, whichever one is going to do, I'll just tend towards what I'll be when I'll be taking good trades or start looking for good trades or to want to take good trades this week is from what is from this major level here. I would not want to be going short from here. I would not want to be going short from here. I want to be going short from this man here. Inside this, that is when it's going to make sense for me. That is when it's going to be safe. That is when it's going to act as well as a confirmation for me that okay, truly, truly, this man is what is bearish or is going to be bearish. And also we have what buy side liquidity here. I took a trade on this Asian session, so I was able to take profit of this level here. So we have this previous high here. Okay, let me go to as low as the 5-minute time frame chart. So we all know what the shaded area is, right? So you could see as we keep going lower, you could see this shaded area here now, this particular colored area here is the first presented fair value gap But on this case now, it is now on what, on the 5 minute time frame chart. But I'll be paying attention to what, to the 15 minutes, because the higher the time frame, the more efficient it's going to be. So I'll be paying more attention to what, to this 15 minutes time frame chart. That's Thursday's first presented fair value gap. So which is why I shaded this. I actually use this rectangle here to shade it out. Yeah, so in case I go lower to 5 minutes or 1 hour, I'm not going to lose this level here. So I'll still have it in mind that okay, this is that 15 minutes time frame chart on a lower on a lower view here. So I have this in place here. So which is this level here, and this green shaded area is the whole of the daily fair value gap here. So you can see this is the 5 minutes. This is the 5 minutes time frame chart. So we have 5 minute time frame charts here. This Friday high is acting as a what, as a buy side liquidity, because it is acting as what, as a previous as a previous high or as a daily high. So I want to say price take out what, this buy side liquidity. I like to see price take out this buy side liquidity and then fill up, maybe trade into this 15 minutes first minute fair value gap. It could trade as high as, it could go as high as going to the midpoint of what, of that daily fair value gap, and then start trading lower. So going lower to the to the daily time frame chart. So you can see this man here is acting as what, as a good buy side liquidity here. So it is what you pay attention to. It's a good buy side liquidity here. So uh which is why it's making more sense to me. So because I would like to see price straight into what, because in my own idea, and what actually been telling some of my students is, whenever you're bullish, or whenever you're bullish in the markets, whenever you're trying to look for a bullish setup, a bullish trade, or a bullish trade setup, you should tend to you should anticipate to see price take out what, sell side liquidity first before a run towards the high. Or whenever you're bearish in the market, you should anticipate to see price first of all take out what, some buy side liquidity first, then before what's running towards what, to the downside. So which is a good scenario here. I would like to see price take out what, this buy side liquidity first. I will not be going short from this level. Even if it comes down here, I will not be going short. I would like to see price, or where I would like to see where it's going to make more sense to me, it's going to make perfect sense to me, is when price take out what, this let me move this. I would like to see price take out what, this um previous daily previous daily previous day buy side liquidity, or this previous daily high, or this buy side liquidity here, which is acting as a buy side liquidity, take it out, maybe trade into this level here, and then start trading and then start coming trading lower. That's going to make perfect sense to me. But like trade into this level here, and then I can now start looking for setup to come to the downside here. So that is when it's going to make sense to me. So we don't know how high it's going to get to, but surely, eventually, it could happen inside the Asian session, or inside this particular Asian session, which we are in. Take out this buy side liquidity eventually, and then fill up that previous 15 minutes first presented fair value gap, which I've been which I made mention of since last week. So I'd like to see these levels being cleared out before any other. So this is this is the levels I'll be looking for this particular week. So even if you have one thing you need to know is, if you can aim for one quality setup per week, it's going to save you from a whole lot of problems. It's going to save you from a whole lot of issues. It's going to save you from risking your accounts or overexposure or whatever. So if you can just focus on one particular trade idea that makes perfect sense to you, even if it is one, even if it is two, that makes perfect sense to you for that particular week, and take that particular trade. it could give you if as far as it's going to give you let's say a 2-to-1 risk to reward ratio, a 3-to-1 risk to reward ratio, or for let's just a minimum of at least 3-to-1 risk to reward ratio in a week. It makes sense. It makes perfect sense. So for me, this is what makes sense to me. I like to see price trade into this level here and then look for bullish setup here. So let me show you guys how I was able to take a trade this beginning of this Asian session here. I don't know if I would attach the video to you guys. So it's just a short video. So first of all, we had this level here. Already highlighted this since Saturday. Already highlighted this level since Saturday. So you could see first of all inside this is the hourly BC. Inside the hourly BC, we are currently on the 5 minute time frame chart. So this shaded area this whole shaded area here is a 1 hour BC. That's a 1 hour buy side imbalance, sell side inefficiency. So inside of it we have 5 minutes. We also have a 5 minutes BC inside of it as well too. So which was why I shaded it with this white colored area here. So which is why I shaded here. I shaded this since Saturday. So which are indicated as well as 5 minutes BC. So going to as low as the 1 minute. This as low as 1 minute. I think I can drop screenshot or a video of it. So you can see the trade execution which I took. So first of all, I was anticipating for price to why it's going to make sense to me because since the levels where I'm anticipating for is just between from here then to the downside, from here just in between here, I want to see the weekly opening gap open inside this level here, inside this range, in between here, and I wanted to see the weekly opening gap open very small. I wanted the gap to be very small. While the markets opened, I also I saw that okay, truly the weekly opening gap was very small. Then it made sense to me. Okay, yeah, it was one of those things I wanted to see, or I was expecting to see. So, the weekly opening gap. Let me use this indicator to treat you guys. So you can see this is the weekly opening gap here. Let me look this. So this is the weekly opening gap. That is for Fridays. Friday, that's 14th of November. And Sunday, the market actually opens on Sunday, but I think you're like allowed to trade on Monday from Monday. Yeah. So different from Friday 14th, 4:49 p.m. Eastern time. That's UTC -5. So 4:49 p.m. UTC -5. That's the closing and the opening of what of 6 p.m. So that little gap formed there was what that's new week opening gap. You can see how small it is. It's very small compared to other new week opening gap you could possibly find. Because if you look at this particular gap here, so if you compare this small one to this is our new week opening gap here. This is a new week opening gap. This range here, this level here to this level here is a new week opening gap. You can see how big this man is. From this level here to this level here is a new week opening gap. So if you compare this to that particular one, now you can know this one here is very small. So which was more kind of like okay, these are like things I would like to see or anticipated to see. So you see price trade into give this little gap here and then trade it down to the downside. And inside this downside is where we have this 5 minutes, 5 minutes, 5 minutes CB, and inside that 5 minutes CB we also have the 1 hour BC. Uh, uh, CB, BC rather. Inside this 5 minutes BC, we also have the overall 1 hour BC. So it's like support on top of support, like support inside support inside support. So you get so inside. I think this 1 hour, this inside this 1 minute as well. So this small shaded area here is also is also a support level as well. So it could be a previous daily gap or something like that. So That was why I was confident to take this particular trade. Going to as low as 30 seconds. Please, if you're not skilled, I won't advise you to do this like me. You have to have a proper idea or proper idea. But I'm just trying to just explain to you guys how I did it, what I saw, what I believe was going to do it. So you can see, first of all, first I told you guys always make sure you're taking your trades from what a major POI. So this is what a major POI here. This O level here out is what my POI. So you can see price we're expecting what that consequent encroachment level of that 1 hour BC, which was one, and also what inside of that 15 that 5 minute BC as well too. A very good support. That's what I mean by support inside of support. So it was strong. I believe it was going to hold. And not just that alone. We also have what? We also have this. I told you guys if you want to be bullish, anticipate for what price will take out what a sell side first, a sell sweep first before that run high. So you could see this. I've taught this before. I've taught this setup before. You could see this is what a breakup block model. Yeah, this is my model here. You will see sell side liquidity was swept out. Sell side liquidity was swept out here. Uh, you see breakup block. So this is an entry model here. A BB. You can see BB, that's a breakup block model. You can see price, um, took out sell side liquidity, expansion higher. It's either you had used this first the fair value gap that formed here. I've taught this over and over and over. I've explained this particular model here over and over and over and over. I've explained this before, so for those that have been part of my class lecture before. So you can see entry inside of this fair valuation gap or inside this breaker block, inside this what breaker block, and your stop loss can be what since the first method fair value gap started from what and the fair value gap started from candle 1, 2, and 3 inside of here from here to here is a what is a fair value gap. Let me zoom in properly so you can see. So you can see this. This is what a very good setup here. So you can see, and this is what if you had not, let's say you didn't use is either you use any of these two. This is the FVG, or use the breaker block model, or use the breaker block for your entry, and your stop loss should just be what placed right below here. So entry here. So sometimes you might not have perfect entry. Let's say you might place your entry here due to the spread, depending on the broker you're trading with. Or let's say if you're trading with a prop firm, they might have some kind of level of spread, so they might just push you higher. So that's that. So which kind of happens. So uh, stop loss right below here, and then ride it either into what into this new week opening gap here, either into this new week opening gap here, or you look at or you use the this man here, which is buy side liquidity, which I've been calling out, which I paying attention to. Yeah, that's the previous. That if you can wait for it, if you want to wait for, if you want to hold it, that's if you want to hold the whole trade. But if you just want a simple setup, that's a straight up setup. I think this run did not take up to how many minutes? Not take up to how many minutes? Because this is a 30 seconds time chat. So if you're not skilled, I won't advise you to go to use um the seconds chat. So that's 15 seconds of 30 seconds. You have to be you need to make sure you know what you're doing, you're well experienced. So you can see uh you now I've explained the reason why I took this trade, why I believed and why I believe it's going to hold as well as a support level. I made mention of what the hourly BC, the 5 minute BC, the my model I formed, a sell side liquidity that was taken, the breaker block model, the fair valuation gap, and where to place stop loss and where to exit. although my major targets were were to the highs. That's 15 minutes. That 15 minutes. Uh, this particular high here, that's previous daily high. That's that previous weekly high. But since we're in the Asian session, I tend to know, since we're in the Asian session, the volume the volume in the market cannot be compared to when you're trading in the New York session, So I know what we have a low trading volume, and it's not likely to just quick. You're not likely to. It's not going to provide me that quick or those quick good moves. So I didn't want to like gamble much on it. I didn't want to like stay too long on it. So I just tend to just take what I could take out of it. So just make the most out of it. So that was that. So moving on to Friday, the major idea is what is to be bearish, is what is bearish. My bias for this particular week is bearish, but it does not mean that you can't find bullish setup in a bearish condition, or in a bearish trend or whatsoever. So I told you guys, I've already mentioned this. Even if you're in a bearish trend or bearish, you can still possibly find an opposing trade setup, but you need to make sure it is very fast and smooth, and but it's kind of quick in and out kind of trade. So which was this? So you could see this setup is actually more like a 3 to 1 or 4 to 1, a 3 to 1. So this is what this is this. Very simple. I'll explain this to you guys. Sell side liquidity. You must make sure sell side liquidity isn't swept up for you to go bullish. Except you maybe find like it's SMC divergence, whereby your ES are swept out sell side liquidity, and the Nasdaq is now weak. It's showing is now weak, so is showing weaker. Let's even see what's the S&P 500 did. So you can see okay, they both took out the stocks and liquidity. You can see the same thing here as well too. So this is it. So it took out stocks and liquidity, same as what as same as Nasdaq. So I wouldn't want this to be a long video, although I tried to. I thought it was going to be within the range of 20-30 minutes, but that's so that's my review, or that's why this is just my take for this week on the S&P, on the email, on the Nasdaq. So